Welcome to the channel, guys. Today we're gonna go in great detail and talk about what happened to crypto. Now, the main elements to keep in mind is the fact that in 2021 crypto created a lot of success stories with regular folks becoming millionaires. 2022 has a reverse course as trillions of dollars have been wiped out of the space. The catastrophic collapse of FTX has hurt investors' confidence, guys, and there's many casualties coming out after what has already been a challenging year for digital assets. There were times in 2021 when you couldn't turn a corner without hearing about cryptocurrency. Cryptocurrency peaked in November 2021 and has experienced a massive collapse since then, while Bitcoin's dropping in value from roughly $68,000 to below $20,000. In 2021, it was all about the meme stock rallies and cryptos. In 2022, one could argue the same is true about crypto, but for very different reasons. The cryptocurrency market plummeted, to put it mildly, guys. The industry was plagued by macroeconomic pressures, scandals, and meltdowns that wiped out fortunes seemingly overnight. As 2021 has closed and 23 has come, many crypto exporters are confused about the state of the industry, especially after the recent FTX collapse and all of its casualty. So one of the major things that we need to understand is that as this grim year in the crypto space has come to an end, it's only an opportunity that the man one touted as the crypto Robin Hood has ended up behind bars. At the same time, investors and government officials are struggling to figure out how a relatively new company with a peak valuation of $32 billion could end up filing for bankruptcy by November. Sam Bankman-Fried, also referred as SBF, was supposed to appear in front of the Congress to testify about what happened to FTX and the crypto exchange he was the CEO of until early November. On the evening of December 12, SBF was arrested by the authorities in the Bahamas at the request of the US Justice Department. He will face various civil and criminal charges as the Congress attempts to make sense of how FTX imploded and discusses possible regulatory structures for the digital asset space. Now, one of the things that we need to understand is the fact that if we look at all these elements together, that cryptocurrency has become massively popular during the pandemic months, guys. You could often hear a rags to riches stories of folks becoming millionaires seemingly days after purchasing a meme coin, tokens that were essentially introduced as jokes. In 2021, the SHIB, a meme coin, shot up more than 700,000%, and one man came forward with a story of how he quit his warehouse job because he was now a millionaire. Many more stories like this one popped up throughout the year, and it seemed like the crypto space was filled with free money. By creating wealth through high returns with cryptocurrency tokens, the space attracted users by promising generous returns on investment. We all know that bank offers meager interest rates for savings account. Crypto lenders and exchanges took the advantage of this by offering yields approaching 20%. Naturally, guys, this led to many folks to turn to crypto space. But in October 2021, SBF was the cover of Forbes, and the Miami Heights started a new season at the FTX arena, while the crypto exchange paid $135 million for a 19-year naming rights deal. At that time, guys, SBF was sharing this plan to give the majority of his fortune away for the good of humanity. But near to the end of 2021, cryptocurrency prices skyrocketed, and it felt like everyone in the space was getting rich. Around November of last year, Bitcoin was trading at around $68,000, and the price of Ether reached about $4,800, and the crypto market was estimated to be worth around $3 trillion, guys. It felt like the crypto space was unstoppable. But near the end of 2021, guys, it was evident that the inflation was still soaring and the Fed would have to raise the rates to cool off the economy. Bitcoins dropped by 19% in December as the stock market sell-off began and investors started the liquidity of their assets. In early 2022, the market volatility further escalated for stocks and in crypto, even though many crypto enthusiasts touted that the digital assets could serve as an inflation hedge. That's not what happened, guys. As it became apparent that inflation could have been tamed with rate hikes from the Fed's, market began to swing. Investors rushed out of cash, and many felt that the crypto winter had begun. It became evident that the crypto wouldn't be the hedge against the inflation many hoped it could, and crypto was just another speculative asset that fluctuated based on the macroeconomic factors. Crypto prices continue to drop with every rate hike, and they haven't shown any signs of recovery lately. But what came in May was even worse. With the Luna crypto network collapse, it was considered the most enormous crypto crash ever, with an estimated wipeout of about $60 billion. Stablecoins were no longer stable, guys. This shook the entire global digital currency market, as there were many casualties and retail investors lost significant money. There were two major players involved in the collapse: the Terra USD and the UST stablecoin, and the actual Luna coin. When Luna and UST crashed, there was a liquidity crunch in the entire crypto space. The Luna coin went from an all-time high of around $119, plummeting below a fraction of a penny before it was delisted. The fall of Terra USD started the crypto contagion that bankrupted 3 Arrow Capital and many other lenders, and by June, Celsius paused withdrawals due to extreme market condition, and this news caused the crypto prices to drop even further. Then a month later, Celsius ended up filing for bankruptcy. BlockFi had to be bailed out by FTX with a $400 million cash injection. Now, when crypto enthusiasts thought things couldn't get worse, it did. The FTX platform collapsed, and it brought down even more crypto lenders. Well, we've already spoken about this many times, guys, but the main thing that you need to understand is the fact that many crypto enthusiasts hope that the worst is behind them. Others aren't so sure of what to expect. What will this government involvement mean for crypto space? It's difficult to tell what will happen next, but guys, since crypto exchanges and lenders aren't overseen with the same regulations as the banking industry, it can be extremely risky to invest in these speculative digital assets. If 2022 has taught us anything about investing, it is that when something seems too good to be true, it almost always is. So if you're looking to invest in cryptocurrency, guys, you gotta make sure that you do your research, guys, because it's tough to tell if crypto will be doomed for the foreseeable future or if the space can eventually bounce back. But the entire industry has been exposed. The crypto space is filled with flaws and risks that will make it difficult for retail investors to find the confidence to invest heavily in this industry again, and many retail investors have seen their hard-earned money evaporate and disappear this last year. So guys, remember that I am not a financial advisor, and to do your own due diligence before investing, and never invest more than you're willing to lose. If you like the video, guys, do subscribe to the channel and do not forget to press the bell icon. Share this video with your friends and family, and stay tuned for our next video. Until then, take care.